by 120 seconds. Yes, by 200.
Good morning, traders. Welcome to the traders. Hold on a second. I've got audio bleed, so I'm going to have to do something with that. So can I get an audio, a screen check? Let's see if we still get that. How are we doing now? We okay? You're still getting an echo? How are we doing now? You're still getting an echo? Okay, great. Thank you. Well, good morning, everybody. Sorry for that. This is what happens when you try to make something better. You stub your toe. Good morning in YouTube. Let me just try to get everything back here to where it's supposed to be. Thanks for visiting the Trader Lab. I'm your host, Tom B., and this is about integrating bookmap order flow tools with auction market theory using volume profile in the intraday developing time frame. By the way, YouTube, can I get a check? Make sure we're all good over there. Okay, great. By the way, I just want to make a brief announcement. I will not be streaming Thursday and Friday of this week, or Monday or Tuesday of next week. I'll be back Wednesday through Friday, and then we continue from there. And I want to wish you all a terrific holiday, some time with family, and just come up for some oxygen. I know trading can, be rather consuming. By the way, we have been working on the audio. I had some problems yesterday with it. I'd like to hear from you, especially in Discord, as far as the quality of the audio and if we're kind of doing our thing. And we're back at that high level experience. Okay, good. Well, thanks, Mike. Thanks, everyone. And thank you in YouTube. Okay, let's get going. We got a lot to talk about today. And I got some new things I want to share with you that I've been working on for quite a while. And as I've mentioned in the stream, I think we have the basis of understanding of market mechanics, how this market works, what the purpose of the stream is to give you a chassis to build on, and also the business side or the metrics side of trading, which is really a statistical or gaming business. That is all available to everyone in the Bookmap Discord Trader Lab chat, as well as 60 PDFs of structured trades, which I do review here, but I am going to try to lean more into other things so we can expand our understanding of market mechanics and tools, because in the end it's all about getting an edge, and there are a number of ways, as they say, to slice and dice the market. However, if you don't have an understanding of the broad stroke or how the market works, in my opinion, you're going to be at a substantial disadvantage. And the idea of the Trader Lab is to give you as much of an edge as possible, and then it's up to you to put the pieces together and vet them into a cohesive, statistically valid trade plan. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. This is for educational purposes only. And there's a lot of additional education available to everyone on the Bookmap Discord server and a library of webinars, etc., in the Trader Lab, and a community of like-minded traders. I think I need a few days off. The brain and the mouth are not in alignment. How about that? All right, let me give you just a couple statistics, because remember, in this stream, it is about creating an edge. And an edge, if you want to think about gaming, and that's the model, and if you're new visiting the stream, write this down. The business of trading is a model that's based on statistics or edge. And the model we use is gaming, and gaming is Las Vegas. How does Las Vegas work? They only play games that have an edge. They don't make them up. They don't change them. They do nothing. And they're also in a random environment, which means the cards coming out of the deck are random and how the gamblers play the cards are random. But because they only play games with a statistical edge in a random environment, over time, they realize the edge because of their discipline not to change the game or make it up or impulse. Can we relate to that as traders and look at how we change the game based on our emotional stimulus? And do you think if they did that in Las Vegas, that would work? I'm going to suggest to you, no. So maybe there's a model. And it is very counterintuitive because we are emotionally stimulated to take actions that are not in our best interest. That is why having a structured plan, a trade plan, just like the casinos do, a gaming plan over time is what extracts the dollars from the gamblers. You have to decide, in my opinion, which side of the financial equation you want to be on. So let's look at our open. Hopefully, we open lower inside of yesterday's range. Grab a pen and paper. Here's a couple quick statistics. There's an 83% probability we will check the overnight volume point of control. There's an 83% probability we will check the overnight midpoint. There is a 71% probability we'll check the previous day's value area low. There is a 70% probability we'll check the previous day's point of control. There's a 69% probability we will check the first hour's high. And there's more, but and all these statistics are available in the Bookmap Discord Trader Lab chat. Now, let's just show you where some of these are. Overnight volume point of control. Value area low, remember, 71% probability. Overnight volume point of control, you wrote these down, 83% probability. Previous point of control, this is from yesterday, I believe, 48.14. Let me just make sure I'm not delirious. I am delirious. One moment. 48. Nope. That might be, is that right, guys? 48.14. Confirm that for me. 70% probability. I believe that's correct. Overnight mid, 83%. There's more, but I'm going to give you just a couple others. Value area high, 60% roughly. Past performance not indicative of future results. We have more, but that'll get you going. So, by the way, if you have questions, post them in the chat. I'll do my best to get back to you. Yeah, PMAG, I will cover as much as I can, but there's a very limited time. I'm getting a question about showing how I use icebergs and all the rest of it. I will try to show as much as I can, but there's the library of webinars, about 26 of them, some of them up to 4 hours long of real-time narration. I think you can see a lot there that I don't have time here, because I cover a lot here. So let's look at the RTH Open. So what do we know? Oh, there's a couple other pieces. Wait, there are a couple other things. Now, I do a lot of this in the Bookmap Discord Trader Lab chat before the RTH Open. Here, resting liquidity. This was in the order flow, and I post, I'm not going to show it to you right now, but we have something called Trader Map Pro, which actually filters out liquidity, so only see the larger players. This is where the larger liquidity was resting. This was still in the order book, and actually it was right here, 25, 27. This is a target up above, and we're currently going for that. Not a recommendation. It's around 30-ish. I use the term ish, because, and this was a target in here yesterday also. So this target has been hanging out. Actually, it's been up here a long time, since the last time we were up here. So, and remember, these levels are adjusted, because for the long-term daily contracts, if you will, we use perpetual backwards adjusted contract. Remember, futures contracts, there's a spread, they get adjusted and roll over. So the volume is constant, even though the price will change. And if you don't understand what that is, just look up perpetual contracts. So this is the RTH Open. This is called the developing volume point of control. Remember, value area low, overnight low, ETH low. And what do we know about value? Let me give you something here, and there's more to this, obviously. This is not a course. By the way, I'm not a vendor. So we're opening inside of yesterday's range, right there, and inside of value. What that suggests at the moment is not much, if anything, has changed. We're in a fair area. This was the retail price yesterday. Retail means highest volume. And remember, trading is a price discovery process. Shopping is a price discovery process. Retail in the supermarket, high volume. The range of fair prices is called the value area. And if the price goes on sale, remember, you're a shopper for S&Ps. If it goes on sale and we think maybe this is the fair high volume price from yesterday, in other words, everybody on bait, by everybody, I mean the majority of the volume was done right here yesterday in the RTH, then this might be on sale relative to that price. If we come out here, we may come back. If you go shopping and it's on sale, you throw an extra one in the shopping cart. It doesn't stay on sale indefinitely. It can come back here. Now in the ETH, this is the high volume. What it is saying here is this is the new retail price. So retail in the RTH, retail in the ETH. Outside edge. That's before the market opens. So now we open right here. And by the way, what does it mean? Open in range, in value. What does it mean? The market's in balance. Are we breaking out of this value area becomes the question. If so, we want to trade in direction of the breakout. And if we're breaking out of the prior day's range, then we're rejecting the previous interpretation of value. So that means north, potentially. So, but right here, we open in range and value. So we're on alert. Now, I posted in the Trader Lab this morning, and the reason I'm spending time with this is all before anything happens. You see, this is what a trade plan is about. That we might anticipate responsive selling. Why? We're going into a holiday. The market's long. We still might want to anticipate selling at some point. But what we anticipate and what happens are two different things. This is what I know. I don't know who's going to take the ball. Are we going to get these selling and then we're going to go down? But here's what I know. This is my outside edge. That's all I know. I don't know what's going to happen. But I did post Let me see if I can show it to you here.
EX, pending debug alert. EX, pending debug alert.
I'm going to try to show you something if I can. I should have set this up for us sooner. This is delta. I'm going to try to show you this. Right here, this is the chart volume delta. And what you have here is buyers. This is the delta. Now, this is before the RTH open. This is 8 a.m. Central Time. And as the market's coming down, this is your chart delta. It's going red. That's saying now these buyers are trapped and now sellers are in control of this down leg. And we're coming into the RTH open. Now, I posted in the Trader Lab to anticipate the possibility of a rebalancing on the open. I'm adding this in. So, and this is another piece. And there's many pieces. And the thing about it is, what might we anticipate? If these are sellers, you see them, sellers, right? And the delta now is red. Now, remember, the delta was green up here, overbought. They're trapped. Now, down here, we're looking to see if we get oversold in here, the book can rebalance, and that would bring us here. So let's watch. And I posted this also in the Trader Lab. Now, I don't call trades. My goal, and the reason I do what I do, is to help traders learn market mechanics and potential behavior. Now, remember, it's only potential. And anytime we step in the markets, the best you have is maybe no different than the casinos. Here's the overnight low, ETH low. Market is short. We're coming in to the RTH open. We make our low. Looks pretty nasty, doesn't it? What is the? I got to move something out of the way here. There you go. Get out of here. RTH open. Right here, we see the buyers. Now, subject to your plan, this is a potential long. Now, it's not the RTH open. Would you like to see the long here, or would you like to see it at the RTH open? Let's do the RTH open, because this is kind of, let's just say, out in left field. This is a structured trade, but it's not a Trader Lab trade. It is sort of a trade, you know. But once you understand market mechanics, you would anticipate we're coming into the open. You would know, and let me show you the delta right here. I've got a bunch of stuff on the chart that you don't normally see, right? This is the, let me just make sure I got the right one here. I think I have too much spaghetti going here for you guys. Oh, I know why I can't see it. Hold on. Okay, let's see. CVD is this line. Let me get some of this off of here. It'll be easier for you guys to see some of this. All right, I'm going to try to keep some of this on here. This is called the volume pressure imbalance. This red line in here is the CVD. CVD is the chart volume delta. It shows us basically who's on the hook. So if it's sellers in control like it is at the moment, that can potentially become your buyers because there's stops, right? So this is our volume pressure imbalance. You can see here it's too high, here it's too short. It works like an oscillator, but it's showing the pressure and the imbalance in the volume. There's other tools here. This is your stops in icebergs. The blue line is icebergs. The orange one is stops. And we're also going to look at stop sweeps. I don't want to muddy the water. So anyway, we'll start here. So this is a potential long, but it's not a Trader Lab structured trade. It is a structured trade, but it's more advanced. Let's go to the open. Now, what I looked at, and I posted this in the Trader Lab, to look for a rebalancing. I looked at the delta coming in, and I saw the market was short, and we had the ETH low. I also saw that I was at this outside edge of value area, and I had my overnight volume point of control above me, which means retail in the ETH. So this is the low of the ETH. This is retail. And in yesterday's RTH, this is retail. So what I'm looking at is market out of balance, potential long to rebalance back to here. This would rebalance potentially. And if I get through here, then follow the yellow brick road. And there's more, but I can't spend time, but I'm giving you as much as a high level overview because I want to move as quickly as I can. And then here, we have resting liquidity over here. This is in the book before the fact. I guess I'm giving you guys too much, right? And then we're going for this. That's still our target up here somewhere. I don't know where we are quite at the moment, but you'll see. Okay, RTH open. I'm going to try to move now. I have to lay out the table, if you will, because otherwise it looks like we're making this stuff up. The fact is, it's called a plan and a strategic approach to market mechanics and behavior. This is the Trader Lab. Most traders are not doing this. It's like a pilot before the plane goes. You're doing all this checking. You notice how the tires go out and kick the tires? Or look at them at least. Flaps are down. They have a whole checklist. We do the same thing. So this is our RTH open. Here's our sellers. Here's our value area low. This is the ATH low. This is retail. I'm looking for a long. Liquidity comes into the order book. So let's watch. Now, the chart volume delta, what it does is it's going to adjust based on what I pull in. So I can make it look like anything I want, but what I'm interested in was this leg coming down for these shorts to become the buyers to get me here. So it was a long, and the long is here. So open, I get some sellers, and of course the teeth start chattering. This is my outside edge, and I know that leg is short. Right here, I get something called VPOC migration. Now, I know I have to clear this to go higher. Why? The volume started here, but you see more volume comes in here. This yellow line moves down. I call this a variable high volume node, and I'm going to label them. I do this. And by the way, when this is moving like a bullet, I'm doing this in my head. I can't stop and label, but I want you guys to see what the market says. This is a language. And I always say I don't use indicators, and you're going to go, well, what's that on your chart? This is what's on my chart below is all order flow related. As far as the chassis and the market mechanics, it's all built on the volume profile and microstructure volume. What I use here is to get more sensitivity and detection of what's happening all in Bookmap. So this to me is all order flow related. Stops, order flow related, icebergs, and then oscillator really for volume pressure and order flow and stop sweeps, and all this is related to the book. So that to me is worthwhile. But if you don't understand market mechanics and how to navigate the market, the language of the market, these tools do not operate on their own. It's a layering process. And if you come to Trader Lab, I think you'll get an idea. So too low, VPOC migration. Here's your test. Here's your migration. This is a long. Notice the behavior. Where do we come? Here. This from here to here is a scale. Now let's watch. Rotation. Where does this trade fail? All the way down here. What is this? VWAP in mid. Now you have a choice. Right here, you could get long or you're long here. If you get long here, your stop's got to be under here. I don't think that's unreasonable. VPOC migration. This is another Trader Lab structured trade. What are we going for? Retail. Remember, shopping. The reason I'm handling the market this way, and again, it's always random, this is the chassis that all of this is built on. Remember at the top of the stream, this was the outside edge of value. This was the retail price in the ETH. The market was short coming in. Rebalance. Back to retail. I get through here. Yesterday's retail. These are targets. If you understand and the probabilities, and it was a 70%-ish or 69%-ish probability to get here, would you want to target that? And past performance not indicative of future results. All these statistics and these structured trades are available for you in the Bookmap Discord Trader Lab chat. It's free, and you can reverse engineer them. Next statistic, overnight mid, and I can't look at your questions while I'm streaming here, so I'm going to take a break in a little bit and take a look, and I'll do my best. 83% probability to get there. Is that a decent statistic? What do you think? VPOC migration. Too low. Let's label it variable high volume node. Notice how consistent I am. You know why I'm consistent? The market's random. Something's got to be anchored. And I talk about this in the Trader Lab and in the webinars I have that you can look at. It's about statistics and getting a statistical edge. By the way, this is yesterday's settlement. Is it possible we're going to go back and tag this? What do you think? Let's see. Oh, yes. Thank you. VPOC migration. What is this? What was that? Trader Lab structured trade, long. What is this? Trader Lab structured trade, long. I know. And there's more. By the way, another target. Up to you. By the way, when I say structured trade, these are structured trades. Whether you take them or not is subject to your plan. Value area high. This is a target. You do remember? Where is it? Roughly 59, 60% probability. That's not so bad. What do you think? By the way, the overnight high is around a 49% probability. Past performance, not indicative of future results. I'm showing you statistics. There's yesterday's high. We had that one. And we have overnight high, which is right there. Let's see if we get that one. Right there. Overnight high. Thanks for playing. By the way, this is resting liquidity here, there. This is... I pulled this off of the Trader Map Pro, and I post this in the Trader Lab. Now, liquidity knows like a banana peel. You step on it and fall on your head. There's our next target. This has all been in here. Where are we? Did we get there? Can't tell. Here, let me get current. Okay. Anyway, next target, not a recommendation. Resting liquidity in the order book. I want to show you the Trader Map Pro, and then I'm going to look at your questions. This is resting liquidity in the book. And you could see they pulled over here, but there's still some sitting up here, which is in alignment with our target, which is up in this area. Over here, we had resting liquidity, and they pulled. Look what's sitting down here. The possibility exists at some point in the future, we will get there. This has been added. This is pressure in the book. Now, I can drop down to a little bit more sensitive one. Let's go down to 25. This is filtering the orders. Let me just show you this. This is an important tool. It's not that this is algorithmic behavior. See how it flashes, and they're goosing the market basically. They add and pull different behavior. What really matters? the more resting, stable, larger liquidity that comes into the book. So you can see where it is. There's that 4,800. This just came in. It's like pressure. And then this is sitting up here. Who knows? The fact is, this is how TraderMap Pro works. Now let's come back. So you see this pressure. Right here is the liquidity marker. Added 684. This is pressure. Think of a pot with water and there's a flame under it. Pressure, target. And then after that, trade management, or you exit and go to breakfast. Now, let me try to show you some other things. Actually, before there's a lot here. I want to show you some other stuff here. Here's CVD again, showing us sellers in the here. And here, outside edge. This is an oscillator. This is your iceberg selling. This is your sellers. And we are in balance. This is this. And we are still looking for this. I'm going to look at your questions now because I don't want to kind of go off into a tangent here on these more advanced tools. This is called Market Pulse. And if you go to knowledge base at bookmap.com, you can read, and there's webinars and videos on Market Pulse. If you have an interest in them, it'd be good things to watch. I cannot go into them here because we could spend hours on how they might be used. Questions? Let me see if I can help out. How are we doing on the audio today? Can you guys still hear me? Snuffle Pagus? Are you a new Snuffle? There's another Snuffle in here. Okay, thanks, Matt. And Marcos, the statistics and 26 webinars that I've done, and start with the primer webinar, are all available in the Bookmap Discord, Trader Lab chat, and YouTube. There's a link at the bottom. You can download the statistics and 60 PDFs of these structured trades I share every day, and the process. The primer webinar is something you guys really need to look at. And when I'm saying that really from the bottom of my heart, as somebody who's struggled and gone down so many dead ends, mentally I cannot cope with thinking about it. I've been trading 43 years, which is not a badge of honor. It's a badge of suffering from all the time of trying to fix and thinking it was a matter of just a little this, a little more of that, a little persistence. And I developed something called Trader Groundhog Day. What I didn't understand, and this is what's so important why I decided to do Trader Lab, was that when you're in a random environment, you get random outcomes. That means winning trades. And we think because we win that we have a process that just needs adjustment, fixing, tweaking, tuning, right? Gamblers have the same experience. They win. That's why they stay at the table. But over time, they may not have an edge. They only might be experiencing a random distribution of outcomes. The house has the edge. What's the difference? The difference is the house has an anchored process. The gamblers play their game, most of them, randomly. Random cards, random behaviors. And don't forget, if you're sitting at a table with other gamblers, which we do, they impact their randomness, impacts our randomness. And so does the randomness in the market of the other participants affect our randomness. But if we sit with the house, does that help us? If we sit on the house side of the table with structured, anchored processes that don't vary, and we have an edge that we can extract. Do we do better over time? Who extracts the dollars from whom over a large sample size? Isn't it the house? How do they do it? Anchored inputs. That's what the Trader Lab is about. Anyway, so much for the Trader Lab, but that's what this is about. I hope that answers your question. And if you're in YouTube, the link at the bottom will bring you to the Trader Lab. You don't have to be a Bookmap subscriber. You'll never be solicited. And there's a lot of additional free education. Stocks, options, futures, crypto, order flow with a high-tier tool like Bookmap, algorithmic behavior, market making behavior, swing trading options, etc., and so forth and so on. Chart volume delta, negative. Watch. Iceberg selling here. There's your icebergs. 1,000 icebergs going off here. 1,400 icebergs. They are being absorbed. Now the fact is that an icebergs are going off here at this level is important to note. Now, what happens here is important to note. That's a lot of icebergs, right? So let's try to see what we might make of this. Now, by themselves, how do you prioritize your inputs? I call this the chassis. This is the volume. And or the auction, if you will, and it's represented by volume. And when you look at this, you probably think you landed on Mars. Well, it's very simple, actually. Right here, let's look at this. This price is too high. Let's label it. You've seen me do this, right? 1,000,000 times, and you follow the stream. And if you watch the webinars in the Trader Lab, you're going to see the exact same process. Now, what I have done in the Trader Lab, I guess it's a couple of years now, is really stick to helping traders learn market mechanics and how the market works. If you don't understand how the market works, nothing, in my opinion, is going to help you without a basis of understanding, and I call this the chassis, because everything is built on the participant behavior, not our indicators. Our indicators are a piece, but if you can't align your indicators with the condition of the market, then I think you're going to be, as they say, behind the, unfortunately, not the magic 8-ball, just the 8-ball. And it's just a personal opinion, not saying it's accurate for you. This is too high. That's why this is volume. And what it's saying is too high. This is now too low in the microstructure. As the high volume shifts, think of it as shopping. Too high. Notice we came back and checked it. Too low. Notice we came back and checked it. So we're kind of ping-ponging. Too low, too high. And what is our other level, which we may never get to because it's not our job to predict? This might still be too high. So the trade is the longs, which I haven't really showed you yet. I've showed you some, but there's more structured trades. This is our target. Why? This is an auction-based number. Now, let me throw, as they say, the fly in the ointment or the sand in the whatever. This is too high in the microstructure, in the developing auction. This is left over from last time we were up here in a perpetual backwards adjusted, in other words, high volume area. What does the market do in fractals? High volume, high volume. Too low, we left it. Too high, this is what's happening now. Too low, this is what's happening now. One of these is going to give way. If this gives way, this happens. Maybe, not a recommendation. If this gives way, then stops here, here, and back to here. If this, then that. If not, then what? This is a conditional narration that the Trader Lab participants do. This is how, and I kind of came up with this, you should narrate the market. So when I develop trading systems, and you guys know, you guys already know about me, it's not important. I learned to think in a specific process-oriented way. Trading is process, I think. Otherwise, Because if it's not processed, how do you stay in alignment? If this is too high and I can't get through it, then that. If I get below here, this is support. If I clear it and don't come back, then this and this. If I come back here and I don't clear it, then what? Then that. There it is. Now, if I can't get through here, then back here. If I get through here, then underline potentially, take out the high, go to target. That's what I know. I know nothing else because it's random. What else do I know? Let's look. Right here, I'm going to take you just a little bit back. I'm going to show you a little bit with Market Pulse. And I hope this is okay. I can't look at your questions and do all this, so I want to. So I apologize if you're chomping at the bit with a great question. So right here, this is just doing its thing. Market Pulse says overbought. Overbought. Now, these are not buy and sell indicators. I don't work like that. And I don't like them, as you know. But in order flow, I want to try to align. Now, right here, it is suggesting we may rotate. But what is my chassis? This is now retail. Look at the alignment. And now let's look at what happens. This shifts up. For the market to go up, it has to move away if you follow the stream. What does it do? It pushes off. That says, if you speak the language of the market, that potentially this is too high. I pull back. I shift down. What is it saying? Too high. Too high. Market Pulse shifting down. Sellers in the delta. I'm adding more. Hope it doesn't create confusion, which it might. Right here, I come down. Retail shifts. Market Pulse is bottomed out and is starting to come up. Delta is still negative, showing me sellers in here. Watch. Sellers still. Okay. Icebergs are selling into this stuff. This now is retail. Selling delta, look below at the red line. Selling delta. This is support. I'm now using multiple tools, guys. And if this makes you crazy, I apologize. And I'm not sure I should even be doing this here. But Trader Lab asked me to do it. And I figure we might as well. So let's look over here. This is the volume pressure imbalance. Delta is short. This is too low. Let's look at where we tested. Yes, that's too low. Now, I don't know when it's doing this because it has to clear this and this to go up, right? This shifts up, potentially too low. We also have a structured trade in the Trader Lab called the IB continuation trade. This is a long, and this is your target. And that happened at 9:30. By the way, I got to go back to this trade. I should do this. This is the IB high, 9:30. This is range extension. We have a structured trade here in the Trader Lab. It's a long here. Your stop is under here, or your long here. Scale. Your target is here. Structured trade. I forgot. I don't think I can multitask well, guys. There's just too much going on here. So I don't know if I'm going to be able to do this. You let me know. But this is, so what I'm doing is I'm putting together pieces. I'm using the auction. I'm using structured trades that are available to everyone in the Bookmap Discord Trader Lab chat. This is a long at trigger. This is your pullback for the IB continuation trade. This is where it fails under here. Notice the liquidity got taken out. This is, you'll notice it's here. It's at yesterday's high. So now you're out of range. You pull back. You have now microstructure. I'm putting all these pieces together if you find that useful. This is too low. This is your outside edge. Long, scale, target. And you could scale ahead of the high. You know, there's nothing wrong with that. And then we're going here. And you just have to be careful right in here. Okay. Of course, you got to be careful all the time. And I don't have resting liquidity up above, which doesn't mean anything, right? But this is primarily auction based. So that's what I do. Not saying it's good. And this is what I know. This is too high. Delta is still short. And I think the delta is reflecting all these icebergs that were going off. You see, these are sellers. Questions. Now look at your questions, and I apologize for taking so long, but I'm just trying to get a lot in here. The mill, I don't pay attention to the SPY. I just stay in what's happening here. I don't, for me, the only other market I keep an eye on is the NQ, and I watch the correlation and the liquidity in the NQ for resting liquidity because they're kind of connected, if you know what I mean. But the SPY is, I don't, you know, you can trade, you can do it any way you want. You can use this process with stocks, what you see here, stocks, options, swing trading, ETFs, doesn't matter. The market, this is a language of the market. So the market just behaves, you know, it's why, what is the purpose of the market? It auctions. And an auction is very simply what's too high, what's too low. The other piece of this is it does it in all fractals or time frames. I don't think of time, and those of you who follow the stream know time is not the piece for me, it's structure. So fractals, Russian dolls. But this was the retail in the last time we were up here, so high volume. And if in this last time we were here, this was too high. The shopper says, I'm not paying that. And we went all the way down, you know, all the way down. Well, now we're coming back up. And the shoppers, tendency of the shoppers is, and again, past performance, not indicative of future results. And these are targets. And there's no precision. There's like, you know, I call it horseshoes and hand grenades. So in a fractal, this is the last highest retail price. We never have to get here. So in the trader lab, it's trade plan and trade management, because you might have a long, and the market may only get in an area and go, forget it, I'm out of here, and leave and never come back here. It may just say, hey, that's too high. But right now, unless something changes, what we know is we're out of yesterday's range. We're out of yesterday's value. We took out, right, so yesterday's high, we took out the ETH high. Everything suggests north of the border until it doesn't. So it's longs only. Now, I know there's some of you who are looking to pick the high. You know what? I used to do that because I thought if I had a structure that, you know, like a pennant or a head and shoulders or picks up a fib, doesn't matter, you know, whatever it is, that I would then, my job was to get out at the 1.5 or, you know, 2, whatever, fib extension, or use a retracement, the 68%, pick it, right? I found for me that that's trying to predict. And the more I let go of predicting, the more I allowed myself to just flow with the participant behavior. It was a choice I had to make. I'm not saying that's the choice you should make, because in the end, if you measure everything, you may find, I found, and I became a minimalist from being a maximalist. You know, I used to be more is better, more certainty, more indicators, more everything. I went the other way. What can I take off my chart that is not material so I can get down to a basic structure of inputs and reduce or eliminate conflict? And that's where the anchoring of a process comes in. So anyway, you guys already know this is the target, not a recommendation. Let me look at your questions again. Um, I'm being asked, is the migration lower of the VPOC not material? It is material. This is showing me volume as it's migrating in a developing time frame. And I'm getting a question, is this important? Yes, it is. Because in the developing structure, you see the sellers, this was too high. As it started coming down, it was suggesting to me counter rotation, too high. You see the behavior? Now, depending where I was, this might be a short or an exit. But let's go back to the chassis, which is the volume. I'm outside of yesterday's range. I'm outside of yesterday's value. That tells me no short, but trade management, counter rotation. And of course, if we fell out of all this and came back in the range, then, I might turn the truck around. And I think of it more like an oil tanker because it takes 10 miles to be short. But at the moment, I have no shorts. I only have counter rotation structures. That's what this is. And if I read this, here's the interesting thing, I think. I know, well, the word know is not accurate. I suspect, more accurate, based on my understanding of market mechanics, this is going to give me a downward rotation. If I anticipate a downside rotation, I have choices. I'm either monitoring my trade with trade management and I'll get taken out subject to whatever that process is, or I anticipate this so I don't jump out the window and I know the trade fails if I get under this. I know if I come outside that stops are at VWAP in mid. I know when this shifts down that I have to stay above it or else this is next. I know that if this shifts down and this shifts up, it is saying potentially this is too low. That's what I know. I don't know if it's too low until I see the buyers. Then I know now it's support. There's my buyer. There's my buyer. This was where it was too high. This now is retail. So too low, retail. This is support. This is retail. That's resistance. That's what I know in here. Notice the behavior. Too high. Not a coincidence. Break above it. Now what? We want to hold this. We want to hold this. Let's watch what it does. That is what it's doing. That's what. So here you see the test, the rotation. You see the break up. You see the test right here. There's the rotation. Now let's see what it does. Can you speak market? Not what it will do, what it might do. Take out this high. If we do, there. If this, then that. And I was starting to say conditional statements is how you narrate. And I got that from developing trading systems. Because when I programmed and wrote systems, they were based on conditions. If this, then that, then what? And then the then what would be a structure or an array, right, of programming, of do this, measure that, That's how systems are written. It would take you down an array. Anyway, neither here nor there. So I took that thinking process and I basically use it here because I'm using conditional statements to guide me what's appropriate in this behavior. So this is a conditional statement. If this is too high, then what? Then, here. If this is too low, then what? Then that and that. Or this is too high and I only come here and then I fail if it's too high. So that's why I came back here and here. You see it? Is everybody seeing how this might work and how you might read it? So when I talk about a chassis, it's this. This is all the chassis. This is also part of the chassis. This in here is order flow and participant based. Stops, delta, iceberg selling, The market is short in here from the icebergs. So we are anticipating this will rebalance. Doesn't have to. Out here, excess on the downside, excess on the downside, excess on the downside, excess on the upside. So these are not buy and sell indicators. This is why I don't use indicators. I don't need this to trade. But now I can use, since I do use order flow, I can now take market pulse tools. This is volume, pressure, imbalance. And that's the only one I'm showing over here. There's many, well, there's a number of them that are actually quite useful. And I'm still working with these because I like to vet things. I'm using these in my own trading. But I'm not fast to adopt anything. I've been like that in the past. I see something, I think it's the, I found the needle in the haystack. And unfortunately, it's me sitting on the needle, target. I'll look at your questions again, and I apologize. Does the VWAP start take on a secondary significance? Well, Ron is asking me relative to point of control, what about the VWAP? They're basically similar in some ways. The VWAP is the volume weighted average price, right? So theoretically, you got buyers above here, sellers under here, depending how you think of VWAP. This is the absolute highest volume. This is an average of volume. This is the volume. So this is the highest volume. So I kind of tend to lean more on this, but we have a structured trade in the Trader Lab called VWAP to VPOC. So right now that hasn't happened, right? We haven't had one of those, but we did have the IB continuation trade. So that's a long. So we're in a structured trade still in the Trader Lab from out here. And this is the same trade. Coming out here is a long. Same trade. It's this. And when we came out here, it's the same trade. This is all a long. This is a long. This is a long. This is a long. These are all longs. If it's vetted, not a recommendation. Trying to go for this thing. Who knows, right? So that's all I have here for you on the trades, because you're sitting long if you're in the Trader Lab, or you're managing your trade if you're in the Trader Lab. It's all subject to your plan. Remember, the idea of the Trader Lab is to help you understand market mechanics. Once you can interpret the language, and the reason I'm not a fan of indicators, and I'm not talking about these are different. For the broader stroke is most of us, when we start out in the retail space, think that the business is timeframes and indicators, and then we pile more indicators to create more certainty. And what we don't understand is that process might be defective, and you'll go down the rabbit hole trying to tune it, which is called curve fitting, with backwards looking processes. And our wiring is to create certainty and avoid risk. I did that early on when I started. And when I started, there were not off-floor traders. Everybody I knew was a floor trader, and I was an anomaly. We had no information, and technical indicators basically were just coming into the where we had access to them. We didn't have computers. We didn't have the internet. My first computer was an Apple IIe, and that's what I started working with. Neither here nor there. And in the mid-1980s, I started working with Ralph and Bill Cruz out of Omega Research on a chassis that became the blueprint for TradeStation. So I was using early version of Easy Language before it was really available. There was no real-time data available back then. So I'll just give you a little background. So I did work on system design with an end-of-day version of what became ultimately TradeStation, and I did beta testing for Ralph and Bill down in Omega Research before any of that. So anyway, notice right here, selling icebergs, and we're getting some good selling. Now we want to watch what's going on here. CVD positive in this leg. So we're now balancing out. You can see CVD is short. As you move in, you can adjust. Short, now we got the buyers in here. This showed right here is your volume pressure imbalance. Now, they're not sells and buys for me. But now I'm below this variable high volume node here. This is a problem for my long. So right here, I could be out of it, subject to my plan, and just be out of the trade. It doesn't matter. It's all a matter of your trade plan. Now, the thing about it is, this is what happens to us mentally. And this is where, by the way, here's where the problem comes in for us. Do you hold for this? Do you have a trade management process that you vetted and you just follow? You're not going, what do I do now? If you're asking yourself, what do I do now? You don't have a trade plan. You already know what you do. If you don't know what you do, you need to know what you do. You do not make it up and solve that question when you're in a trade. You solve that question before you put a trade on, called trade plan. So here's our sellers. What's the market? Long. Look what we're doing. Bingo. You'd be out, or you're stopped someplace else and you're just going to give this back. I wish I knew the answer for you. I know the answer for me, which is not important. What's important is what's your answer. If you're sitting with a question, you need to get your plan vetted. The difference in a professional trader and an amateur is they already know what they're going to do before it happens, because they accept they don't know what is going to happen. And remember, I was saying, we don't know if, we don't know how, we don't know when, we know nothing. What we know is maybe. And this was too high. Now, it may still get there. I have no idea. If this trade is over for someone, and this was, remember, this was retail. This was too high. We took it out. We found our seller. Now, microstructure. What is too high? Let's come back. This is too high. Microstructure. This volume is too high. And there's no way to know, until you know. Then it's like, oh, I guess that's too high. So let's look at this. Retail. We're below this. That's too high. So now this is resistance. Here's what you want to see, potentially, not a recommendation. If we come back here, let me make sure I've got this right there. What happens? Do we check it and it's still too high and then we come down and take these guys out, or do we push through? So this is resistance, right there. You see that little high volume sticking out? That was created here, right where that yellow line is, the VHVN. So all this right here, this is important. This area, important. This area, important. So let's go back and look. What was too low? This is getting kind of busy over here. Let me get rid of this. You'll see why this matters, maybe. And I'll go look at your questions while we're waiting for this thing. So this is a conditional situation. If this, then that. What is it? If this is too high, if we could return, then south. If this is too low, if we return, then north. And it can just do this, bing, bang, and fall out. So if we come back up here and we don't clear this, hasta la vista, or at least back to here. If I come back here and I don't take this out, then I can rotate here. Now, I don't know what it's going to do. So what do we know? VWAP stops at the mid and under here, poorly auctioned. So we can come outside and then do mean reversion. What this is is we might be transitioning, and I don't know, to two-sided trade where we just sort of start rotating. So this is our support. This is support. You got, so support becomes resistance. Here it was resistance. Becomes support. See the test here? Now, resistance. Support, I should say, becomes resistance. There, right in here. And this is support. So you've got these two locations. Here for support, here for resistance. If you don't get over this and you take this out, then this is on the table and this is on the table. So we'll see what happens. Let me look at your questions again. It's a little complicated, right? We are in the short, remember, CVD, short in this leg. CVD, short, means sellers. Now we want to see, what do we get? Do we balance? So we want to watch. Stops are coming out. You can see these stops. That's the orange line there. CVD. So let me do this for you guys. Don't I only have so much real estate, you know? See this is the delta the volume imbalance there. You see absorption there. You see your CVD, which was positive in the very up in this part, go negative. Now we're short. We have sell icebergs going off there. We have the stops right here. And now we're watching our volume pressure. And in the short term, we have this leg short. So let's just watch and see what happens now. And remember where we have checked. Let's come back. This is to see how you mix. I'm putting a lot of pieces together, so it might be a lot for you guys to digest, right? This is support. And again, I can't predict anything. It's not my job. So this is too low. Shoppers, you can't buy S&Ps at the moment here. Let's come back. This is retail. As long as we're staying above here, we're still okay. We have to clear this to go north. That is the auction. And what I'm using is the auction, and I'm interpreting a language. Indicators basically are Google Translate, right? Because that's what they do for us. This is an indicator that is translating the pressure. This is translating the delta. That's all these are. There's nothing more. Nothing fancy. But the chassis, the auction, is what all this is built on. And if you understand market mechanics, how the market works, you can deploy structured trades, which this is. And then you can add pieces in to further enhance timing and understanding of process. But without a chassis, in my opinion, you really don't have a foundation to trade on. What is the condition of the market? Up. What is the current condition? Rotational. How do you trade a rotational market? It is outside in. So if you slice this down, we are trading this outside in and in a higher time frame fractal to there. So you remember this was a target down here because it was retail in yesterday's RTH, and we had to check it. Was it too high? Well, once we took it out, then this was the last time we were up here, and it was too high. If this now, because we're above it, is too low. And we might come back, and you never know where too high is. This is our target because last time we traded up here, it was too high. So now, potential to return here. Is it really too high? And it doesn't have to get there now, ever, never. This is how auction market theory works. And now we are looking at the delta of the sellers in this leg as the fuel to take us higher.
178. Ice for BS by 266.
Questions? How we doing in YouTube? You guys tracking? Hope you're getting something out of this. I'm trying to cover more, and you guys will tell me what's beneficial to you. If you're in YouTube, there's a link in the bottom. You can click if you're inclined. That'll take you over to the Bookmap Discord, and you can find your way to the Trader Lab. There are 60 PDFs of these structured trades that I'm narrating here, plus a library of webinars. I suggest you start with the first one that's called the primer. It gives you an understanding of this overview of this process, which is auction based. In other words, what creates the market? It's not our indicators, it's the participants. And how might we navigate that? Well, if you understand market mechanics or the language of the market, I don't use any indicators to determine any of this. Then it's structured trades based on statistics and these 60 PDFs of these trades you can reverse engineer. Then I'm using order flow, icebergs, liquidity, and now I've added other tools to share with you that are all order flow related. I don't use any indicators for the understanding of the market mechanics. In other words, where's the market going? What is it doing? What might it do? What's going on, right? For me, there's no short. There's only longs today. There could have been shorts, and there are days where I'm trading both sides. Today, I can only trade one side at the moment, and that's because the trend is up in the intraday developing time frame. Counter rotations are opportunities to get long or to get stopped out or to scale out, subject to my plan to get repositioned. That's all I have today is trade management on my longs or counter rotations for ads, subject to your trade plan, or just longs, So we've only had longs today in the Trader Lab, and you would be long structured trades. And you can all visit the Trader Lab if you like. You don't have to be a Bookmap subscriber now, ever, never. You'll never be solicited. And the Trader Lab, by the way, is a community of traders looking to leverage their collective experience. There isn't one way to trade, guys, but I will suggest this to you. If you have random inputs, you don't have potentially a sustainable process to create longevity in the business. Remember how casinos operate. They have sustainability because they trade a structured process that's anchored. And the difference between randomness of process for inputs and anchoring is the difference between having a measurable edge and having, let me just use the term, old computer term, garbage in, garbage out. And many of us have a defective process, but because we're in a random environment, we think it's just adjustment, tuning, tweaking, or let me use the other word, curve fitting. And we think, and I kind of coined a phrase for myself called Trader Groundhog Day. I spent years doing that. And I really learned a great lesson when I built trading systems because we would do optimization. You grab a big chunk of data, which you knew the market changed. So maybe be 30 days and you go back a couple, 30 days, maybe you go back 2 weeks or so that or 3 weeks, and then you'd go a week forward. And then you'd repeat this process as a rolling optimization. And what you were doing is looking backwards to try to, quote, predict a fit for going forward. And it's very logical for systems. However, you're looking, it's like driving Formula One, looking in the rearview mirror. I don't know if that would work out so well, right? But that's what you do with optimizations and systems. Well, when you guys go back to your indicators and you tweak and tune or lay an indicator or a stochastic or an oscillator or pick it, whatever it is, pick your du jour, pick the right envelope, the right this, the right that. It's all the same. You're just doing it a little differently, but it's the same. It's the same thing I did in systems. And all it did was I'm trying to catch up to a market that's behaving based on the present by looking in the past. We're not in the past. We're what's happening right now. So the only way I found I could measure and create a trade plan with an edge was to throw everything else out, because I was actually working against myself because I was random. My inputs were random, and I was in a random environment. And I addressed this in the primer webinar in the Bookmap Discord chat, and you can all access that, plus 26 total webinars, some up to 4 hours long, of this in real time. And you can see it. And I think for many of you, the light bulb will go off, because you'll find that trading is not indicator based. It's an understanding of how the market works. And then you can kind of extrapolate out what works for you. And how about this? Once you can understand market mechanics, which is how the market works, you can use indicators. But many traders think it's a generic one size fits all. The market moves from directional to rotational, and it does it in all time frames and fractals. So you may build a plan that works when you get the opening move, right? And you get that, when the market does its thing. Then the market goes into rotation, something like this, but it can be in a wide range, and you're using the same process, and now you get what is called chopped up. Why? Because you're not in alignment. The condition of the market has changed. Now, currently, what's the condition? North. So what do we want to do? Longs, not a recommendation. What happened here? It changed to rotational. Is this the same plan? Well, in a higher time frame, up for the day, and then what? Outside in. Outside in. Are you getting involved here? Here? Or should you be involved where we were in the trader lab? Long here. Long here. Long here, long here, long here, long here. Rotation here, long here. Where's your trade? Obstacle, long here. Support, here. Does your plan get you long here for an ad, knowing that if it fails, it's right under here? Is that a good risk-reward ratio? Scaling here, going for that? I don't know. If you're in Trader Lab, you would know. And if you're in Trader Lab, you might have added, or you're just hanging out, working on your crochet, because you've already got your maximum position on and you have a plan to manage. This is what Trader Lab is. The thing about Trader Lab is it's not what I do. My plan is probably very different than yours. There's a psychological alignment that needs to take place when you build out a trade plan. There are some traders that are going to be rocking and rolling, buying this, selling that. Me, I can't do that. I get dizzy. What do? I just do my thing. You're going to find, if you have a plan and you're not triggered emotionally, because you know where your edge shows up. You know what edge is, right? What is the probability of getting risk neutral before taking a full stop? Risk neutral means you're trading more than one contract. So one buys the stop on your runner or runners, subject to. When you're starting out, the psychology, the fear, all that emotional triggering is wired into us. We cannot stop it. Early on, I thought I wanted to kind of remove my emotions. I visualize being Spock, no emotions. I did everything short of a cattle prod of behavior modification, so I wouldn't feel when I was in a trade, that I would just be logical, process oriented, intentional. Didn't work. So instead, I had to reframe how I experienced trading. And that was the trade plan, that the work was all done outside. So I wouldn't freak out, get short here, bail out because of this rotation, when I knew statistically, and I had to do the work, and this is the work part of trading, so that when I come to trade, the work is all done. And I'm managing my trade based on a statistical process, going for my target, which, by the way, is just ahead of this, no, not a recommendation. And look what's sitting here. Isn't that interesting? 333 contracts. And I have a saying, leave some for the sweeper. Now, if we take this out and keep going, it doesn't matter to me. My trade would be done. Should I be okay with that if it goes from 30 to 50 and I'm not in it? Two answers. One, no. And the other thing is, I have other ways to get in if there's a good reason to take risk. Any questions? Is this making some sense? This is Trader Lab. Marcos, they're in the Trader Lab chat. If you're looking for the PDFs, you need to go to Trader Lab chat. Oh, thanks, Flatterazzi. We have a 20-year bond auction. That's always exciting. And that happens at 12 noon, just as I fold up. So theoretically, and there can be a substantial reaction to the auction. So this is our target, and this is a structured trade in the Trader Lab. Now, are there any questions about structured trading, what we do in the Trader Lab, and how you might use a process to interpret participant behavior? And I'm also sharing as best I can with minimum time how to incorporate delta for overbought, oversold. In other words, and you can break this as the chart volume delta. So I can zoom in and out to see the legs. And remember, all this iceberg selling is giving me the delta. They're selling into the buyers. Now, there's something interesting about it. It's not only that they're selling, it's what's the reaction. Now, these guys are selling. Here's buy stops. Thanks for playing. They're taking the other side. They're absorbing. We can see it. I can see I have my structure, which is auction based. I'm above the mid, I'm above the VWAP, and I'm holding the high volume. That is saying the shoppers think this is too low. This is retail, and we're coming back to this, and that be the end of my long trade. And again, not a recommendation. It could go to the moon, Alice, or never get here. Final questions. I've got a couple minutes left. And remember, if you're interested in this kind of trading, understanding the business of trading, there's no one way to trade. But if you understand how markets work, it might give you a different outcome if you're not getting the results you want. Also, I can assure you, retail traders don't think this way. And remember how Las Vegas works. They only play games with a statistical edge. This is what these PDFs look like. So circles, arrows, and remember, I'm not a vendor. There's no course. There's nothing to sell. If you visit the Trader Lab, you don't have to be a Bookmap subscriber now or ever, never. You'll never be solicited. And there's a lot of additional streaming and other education, stocks, options, futures, crypto, order flow with a high tier tool like Bookmap, and a lot more. I think we are getting to our target. Let me go take a look. So this has been sitting in the order book since we were last up here. Is everybody tracking? This is absorption right here. This is being absorbed. This is buy stops, 455. Who's short? Interesting, isn't it? Final questions, guys. Delta short, reflecting the icebergs. Icebergs, they're being absorbed. Doesn't say anything about what may happen in the next 5 minutes or tomorrow. Remember, market is long. At some point, there's going to be some chips taken off the table. So not my job to predict. I just know investor behavior. If you're long, going into a long weekend and a holiday, what might you do? So we might anticipate that. But at the moment, for me, and it's not a recommendation, I always have to say that because I'm as clueless as everybody, I might anticipate profit taking. That doesn't mean I get short. It might only mean I take my target and fold up and meet my friends for lunch. And another day in the market following a structured trade plan. Hope you're getting something out of this. If so, please give a thumb up in YouTube. There's a link in the bottom if you're interested in the Trader Lab and what we do. This is about market mechanics, understanding how the market works, why it does some of the things it does, why we came here and it was a support area, why it was an ad, why this was resistance, why we had longs that are structured trades. Why order flow? Why? Next target. And it's not necessarily the high of the day. It's not my job. Remember, my job, follow the yellow brick road. Let's see if we have any resting liquidity, if we can see anything up here. I don't think there is anything up here. Well, here, I don't think 48.55 is on the list for today. That would be pretty far out, as they say. Not my job, though. You know, not my job. So there's nothing in the order book up here except for this. So just make note of that. Don't know. Let's look at the NQ. I call NQ the snake, by the way. I traded NQ exclusively for a number of years, so quite familiar with the NQ. And if you want to trade the NQ, I'm only going to make a suggestion. Learn how to trade the ES, because the process of the auction is generic. Okay, we want to watch this here. So watch this liquidity. And for me, I'm just going to say, and it's not a recommendation, it's not a short, but it could be a reversal or a time to get out of Dodge and work on your holiday shopping. Speaking of which, I want to wish you all a great holiday. I will not be streaming tomorrow and Friday, and I will not be streaming Monday and Tuesday. I will be back Wednesday, Thursday, Friday next week. I will pop in and out if I can of the Discord chat just to wave at you and say hi if you're in there. This stream and all these streams I do are available exclusively to the Bookmap Discord Trader Lab participants. The Trader Lab is a group of like-minded traders who have come together to build out trading processes and the business side of trading, trade plans. It's about the business of trading. The goal, if you're in the retail space, is to understand whatever is out in the retail space has been sorted through with a fine-tooth comb. Now, you might be the exception, but I'm going to suggest if you're looking for the needle in the haystack, that maybe you look someplace else. Everything you need is right in front of you. The problem is the process to extract the edge of those tools. How do you do that? That's what the Trader Lab is all about. If you learn market mechanics, in other words, how the market works, why this might be the high of the day or not, if you can understand that, do you think that might give you an edge over other retail traders who are letting their indicators translate the behavior of the market? And while the outcome of any interaction or trade is always random, do you think there's a method that you might be able to adopt that might separate your results from other traders? That's what the Trader Lab is about. And no matter how long you've been trading, we're always trying to get better. That's what the Trader Lab is about. Our senior trader has 54 years of trading that he admits to. I've got 43, going on 44. You can hear a little bit about my background. And the fact that I've been trading as long as I have is not a badge of honor. It's a badge of pain because of all the dead ends and the trader groundhog days I experienced trying to fix a process in a random environment that was actually defective. But because we operate in a random environment, we cannot differentiate randomness from defective process. When I figured that out, and this took me years to know that my process was defective and that my process was being built on a emotional need to be right and to predict, when I didn't understand gaming, which is statistical expectancy, not right or wrong or prediction. Casinos can't predict. They just deploy structured games that have an edge and rely on the structure or the expectancy of their games to extract dollars over a random sample size from the gamblers. In my humble opinion, that's the business we're in. You can either sit with the gamblers or sit on the house side of the table. If you've been sitting with the gamblers and you're not getting the results, you might want to explore what it might mean to sit on the other side of the table with the house. That's the Trader Lab. Thanks, everybody. Thumb up in YouTube if you got something from this. Subscribe to the channel if you're interested in more streaming like this. But the Trader Lab is a community. There's a lot of resources, statistics, screenshots, circles, arrows, of course, a community of other traders. We are leveraging our collective experience. We've all walked in your shoes, plus a library of webinars, some up to 4.5 hours long, of me doing real-time narration of structured trades. Thanks again, guys. Happy holidays. Be safe. Take time with the family. Take a deep breath. Think about your goals. Think about what you've done this year. The good, the bad, the ugly, all of it. And what do you want to do differently? Everything is an investment, your time and your dollars. Get a yield from it. If you're waking up with Trader Groundhog Day, it's like going to school, paying tuition, and then repeating the class. Learn from your experience. We've all done it. The thing is, if you're waking up, repeating the class, why? This was our target, by the way. For me, flat, time for lunch. Take care, everybody. And remember, I won't be streaming Thursday, Friday this week, and Monday, Tuesday next week. But I'll be back happily to see you guys on Wednesday. In the meantime, Trader Lab, this stream will be available to you until I stream again. So you'll have it through the weekend and beyond. Thanks, everybody. Thumb up. Thanks again.